Gold particularly, I know lots of guys are interested in gold. Let me just have a look at the time so I know when to cut it. Right, got it. So I mentioned short before about where we are now, okay, and that was last week, Friday, okay, I mentioned that. I still think you've got weakness. Again, much like your index markets, okay, you've got a similar kind of thing with your S&P, really. Slight move higher, you've got a high stock oscillator, the price is moving near overbought. There isn't enormous steam in it, it requires market sentiment. By the way, I believe it's a US holiday, it's Martin Luther King's birthday today, I think, so there might be a big removal of volatility, but there's tons to learn anyway, and some assets are still moving, like I said, some index markets and things like that. So yeah, I mean, I'm holding my short bias on here. I think in the longer term, you will come down. I think gold is quite overdone as well. All right. And, I think mainly what I would say is markets are pending a change. You've had a period now significantly of, you've got index markets come all the way up, futures markets, you've got gold come all the way up. I mean, if you look back to October, you've rallied basically all the time since. You've had key rejection there. Okay. Market doesn't want high prices. Key rejection here. It may be the case that you creep up slightly to 28.8. You could have a front runner now and just hold off. But anything higher really, and I'm looking for short side market value. And it may be the case that you see your stock oscillator come up like this over time. I mean, whether it takes a minute to do that or not will be seen. But nonetheless, I wouldn't want to buy gold. I just think you're too late to the party. I don't see the reason at all why you would want to buy it. If you wanted to buy it, you should have done it there. Yes, we can argue that it may go up. Same with the S&P market I looked at before. You can argue that it will go up. You can say, yes, that may occur. But at the end of the day, you don't actually know. And the only thing you can do is attain that market value statistically. Again, it's a statistical, factual process. You can see what has caused the fall before. You can see where you've had a fall before. So obviously, you're looking for that again later on. That is the point of trading. That is the point of market dealing, or in any industry where you're dealing anything. Generally, you're looking for a good deal, and you've got to use your historical price data to affirm what is a good deal and what is not a good deal. That's how you decipher the two either way. Okay, so any rise higher, I'm far more interested short than I would be long. Even so, if you don't look at October, I mean, you had a fall from May to October, that's 5 months. But going back further than that, I mean, you started rising November 2022. And again, I'm giving you the very long-term view of the market. All right. And then even before this, you were down here. So you almost double the price over the years. You would expect at some point that you will have a significant retracement because you've only come that far. And look what happened last time. You come up here and you've got weeks or months and months of down move. All right. So it's statistically, like I said, a better option to short higher. Statistically, it's not even the case that is untrue. It's absolutely true. So whether you think it'll go higher or not, it's not much of an issue.